From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 17th, 2015. In a moment, I'll be taking a look at the GBPUSD, Greater British Pound versus the US dollar. But I want to do a little bit of a recap of some of the trade suggestions we've talked about over the past few days. First off here, on the euro dollar, the suggestion was to sell into 1.1455, have a pending sell limit right there at the bottom of the blue shaded area at 1455. Came very close to taking that trade in. The top of that candle is 1449, so about 5 to 6 pips from taking that trade in here on the euro. Has not been successful yet of taking us in. So not in a trade yet, but very close to it as it challenges there into the blue zone. I'll leave that trade there today because I believe this is our resistance we need to follow. You follow it back here to the left. Take a look at what the market did the last time we were here. So in the direction of the longer term downtrend, if we're going to sell it, we want to sell it as close as possible to that blue shaded area. Risk, of course, the stop loss is above it close to the 1.1500 level, and we'll look to target the pink zone or lower. Very interesting is that yesterday in the trade room we talked about the resistance into the blue zone and the support into the pink shaded area, and it played out just exactly as we discussed in the trade room. Support in the pink zone, now back to the blue zone for the euro dollar. Moving over to the USD CAD, one of the trade suggestions was a pending buy in the midst of that purple shaded area prior to the market closeout yesterday, or close of trading yesterday, canceling that trade because we just hadn't seen a whole lot out of that trade there, and it wasn't an extreme move that we had seen, so canceling that. If you didn't cancel that pending trade, you probably have a little bit of a stop loss hit as it pushed right down through that purple shaded area. Next area to look at, and we'll talk about this more in the trade room today, is this orange shaded area into the mid 1.2300s. Moving over to the US yen, over the past few days, actually since Friday, we had a buy order there into the purple shaded area. It came very close to the stop loss on the spike, was able to survive that. Stop loss was a little bit underneath that spike, closer to the 20 level, and it survived that spike and came back up. This morning, as I saw the market pushed above there, we saw about 20 pips of profit on the trade. It came back down. I saw about 7 pips of profit and closed the trade. I just don't think it's doing what we expected it to do, so I've closed out that trade now with about 7 pips of profit. Moving over to the New Zealand dollar, that was the next trade that we had going yesterday. I actually took a sell into the yellow shaded area, in the middle of that yellow shaded area, looking for a turnaround to head back down towards the green shaded area. Very tight stop loss just above the yellow zone, and as you can see, it never pushed under the yellow zone and now has pushed above it, taking out that stop for about a 39 pip loss. So hopefully the loss is small enough that we can regain that back with some other trades as we go through the rest of this week. Moving on over to the GBPUSD, the Greater British Pound versus the US dollar for today's analysis. Actually, long-term trend here for the pound dollar has been down. It's not too hard to see that here on the daily chart. We can see going back to several months, the long-term downtrend connecting the highs with that blue trend line. This is the first time in quite a long time we've seen the market push above that blue trend line, and a little bit of a change of the trend pattern. That's really what we're looking for, is a pattern change. The pattern of the trend was a downtrend, lower highs and lower lows. Now we're starting to see higher highs and higher lows as it pushes through that trend line. So that begins to give us a little bit of a change in our trading focus. Under the blue trend line and in the downtrend, our trading focus was selling resistance or breaks of support for a continuation of the downtrend. When the pattern changes and we start to see higher highs and higher lows, we start to focus our efforts back in the other direction, where we're looking for buys on dips into support or breaks of resistance. Zoom it in a little bit here on the daily chart, and you can see we have pushed above the blue trend line. We've actually made some higher lows along the red trend line, and we've made higher highs along that same channel with the red trend line. So any dips into support become opportunities to buy it in the direction of a potentially newly forming longer term trend. Right now it's a short term trend, as we can see that red trend line moving higher, so we're looking for a continuation of that potential longer term trend. So two supports I think we want to pay attention to over the next few days. Zoom it in one more time. First off is the yellow shaded area, and that's of course where the current market is, and along the red trend line. As long as it stays above there, I think we're looking for buys on dips into this support level, and I've already put a buy order there. Yesterday it was a little bit lower. I've actually moved it up. It was at 35 yesterday. Today I've put it at 53.45, moved it up about 10 pips, looking for a buy at 53.45. The stop loss is down around the 52.95 level, just underneath the 5300 level. And I'm looking, of course, to target the blue shaded area as we take a push back up again. So there is a buy order sitting at 53.45, looking for it to go back up. It has not been activated. It's still a buy limit sitting down there at 45. The next area, of course, that we'd look for support would be the purple zone. So if it breaks under the yellow zone and under the red trend line, it doesn't mean the trend is going back down again, but that just means we have to wait for it to reach the next support before we look for the next new buy. And again, the target here for this would be all the way back up here to the blue shaded area. I've taken multiple Fibonacci retracement levels here on this currency pair. Let's go down to the 4-hour chart. Zoom it out one time. We did this actually during the trade room yesterday just to confirm some of these support levels that we've talked about. I've taken Fibonacci from the lowest low you see here to the highest high on the 4-hour viewpoint. I've taken it from this low here in the green shaded area where the 3 green arrows are to the highest high, and I actually took it from this low right here just underneath the purple zone to the highest high to give us 3 different ranges measured with Fibonacci. And interesting is how they overlap here on the bottom of that yellow shaded area. They come very close together no matter which trend range you look for. They're very close Fibonacci's right here in the yellow zone, and then once again down here closer towards the purple shaded area you see that congestion of Fibonacci down there. So that confirms both the purple and the yellow zone not only as factual historical support and resistance, but naturally recurring support and resistance based on the Fibonacci sequence and patterns that you see there. So any dips into the bottom of the yellow zone become opportunities, I believe, today to look for buys, staying on top of this historical resistance and these Fibonacci levels. If it breaks underneath here, that likely intraday will change the pattern, and we'll look for it to take a dive back down here towards the purple shaded area. Stop losses are under the yellow zone, and we look for it to go back up. Forex Black Book's green, and that's something we need to mention. Forex Black Book has turned green this week, which gives us a bullish bias, and that's not too hard to see. Over the past several weeks we have had, or several days, we've had a bullish bias as it's gone up along that red trend line, which caused this to turn green. So what do you do with that? If it's green now, you're now looking for green or buy signals here. So I actually am happy to see this come back down a little bit, settle out into support, and then we look for a green or buy signal. It's very similar to what you see down here at the bottom. Even though the trend bar was red, it went down, several green arrow buy signals, and then it went up. Here it went down, we have a few yellow buy signals, and it went up. So now we've seen it coming down again into support. We actually are going to look for some new buy signals. I'll look for the buy opportunity prior to getting those signals, but those signals, the buy signals from the Forex Black Book, will just confirm the upward momentum and the shift to go back up for the pound dollar over the next few days.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.